Question 10. Jack Taylor owns and operates 3 businesses. He's got a bookkeeping service, a retail store, and a tutoring service. The entity principle requires him to A. Treat his personal income and that of each business as one entity for tax purposes. B. Always record each of the firm's transactions in Australian dollars. C. Collect and retain source documents to verify the transactions of each business. Or D. Keep the transactions of each business separate from the others by preparing separate records and financial reports. To answer this question, we're going to need to look at what is the definition of the entity principle. It says the business must be a separate accounting entity from its owner and other entities owned by the owner. And in practicality, that means the transactions and financial records of the business should be kept separate from the owner's personal records and any other businesses owned by the owner. So based on that answer or definition, we can look at B and say always record the firm's transactions in Australian dollars. That's got nothing to do with this. And C, collect and retain source documents to verify transactions. That's actually the qualitative characteristic of reliability, so we don't need to worry about that here. So we'll get rid of B and C. Let's look at A and D. A says, should he treat his personal income and that of each business as one entity? Well, the entity principle actually says the opposite. It says you should keep his personal records and the records of each business separate from each other. They shouldn't be recorded together as one entity for tax purposes or when you're preparing your balance sheet. Everything should be separate. So we're going to get rid of A and go with D. The entity principle says with his 3 businesses, Jack should keep the transactions of each business separate from the others by preparing separate records and financial reports.